Hey everybody, it's Wednesday, April 8th. This is the midweek review for day traded versus. Just take a minute, look at the risk disclaimer. We already had a lot of stuff happen. All of the targets that we had for the week got hit. We had the ceasefire hit and a bunch of other stuff happened. So we're gonna go ahead and get right to it. Let me switch screens. Let's switch screens. We're on screen two. How you guys doing today? You guys all right? Who all we got on here? Oh, we got
Uh,
Coco.
yeah,
Okay.
I didn't trade today. That
What's
was
up? What's up? What's up? Let me see. So let's start with the news. Let's start with the news. We had the biggest news of the day, which was the ceasefire. And then latest thing I saw on it, let's see what we talking about. NATO wasn't there when we needed them, and they won't be there if we need them again. Remember Greenland, that big poorly run piece of ice. Okay, interesting. Last thing I saw that was like really, really important was that Iran actually Iran's claiming victory and US is claiming victory, and Iran's already said that the U.S. Israel have broken the ceasefire already because uh, Israel's still attacking Lebanon, the Hezbollah in Lebanon. So that's the latest. I don't know how it's going to affect what's going on right now, um, and I don't know how that's going to push any of the decisions going further. Um, the Strait of Hormuz is has allowed a couple of ships to pass by, so we had some a drop in the oil prices as of late. I think it's last time I saw it, it was under $100 now. So that's gonna probably have that's gonna push the markets down a little bit on the oil supply. So we'll have to kind of monitor that. And then as far as economic calendar, we only had FOMC today at 2 p.m. I don't know if it really had a lot of effect on what happened today because we had already got the news on the ceasefire. And some context behind the ceasefire. The ceasefire was they were given the deadline of 8 p.m. and the deadline that they were given actually uh they gave the ceasefire news at 6:32 p.m. So as soon as the market opened on yesterday evening, uh that shot the market up. And we were already up as soon as we got the news release, over 2 and 3% on ES, Dow Jones, and NQ. So that's kind of like a recap. So all of our upside targets got destroyed, and they just blew through those. Um, as far as the rest of the week goes, Thursday we should have unemployment, and we got PCE. So we'll have some red folder news on tomorrow, and then we have GDP on Friday. We got CPI, consumer sentiment, and inflation expectations. Now, here's the kind of thing you want to consider. Let me see where we at. Okay, over here. Here's the kind of thing that you want to consider. I haven't marked up the ES and NQ charts yet, but and I'm still in the middle of this. So let's take all this stuff off and let's just look at the daily real quick. So what we're gonna probably end up seeing, right? And this is just because on the last session, if you weren't on, we went over the COT report, And the COT report basically show you hedge funds versus institutional versus retail trading. And that's basically like the sizing of the orders that have gone in. And a matter of fact, let's just bring it up. So this on bar chart is the best way to see it. And let's go here, here, and here. Okay. So going into the week, right? The green is let me the green is so you have three types of trading, right? You have retail traders. That's us. That's us and anybody under a certain dollar amount. I don't know what it is. I don't want to misquote, but that's us versus anybody up under a certain dollar amount. And that dollar amount is actually pretty high. So I don't know if it's 5 million or 6 million or 10 million, but they anything below that, they consider you a retail trader. Your large specs are your whatever that number is and above. That's your small hedge funds to mid-size hedge fund and even some larger size hedge funds, right? And then there's a number that maxes them out as well. I don't know what it is. Again, I don't want to misquote. But the number that maxes them out starts your commercial, your institutions, the largest of the funds. And those are the ones that move the market, right? And that's what each of these different styles or these different speculators represent, right? So your comms is your institutions, large hedge funds, and retail, right? That's blue is your retail, green is your hedge, and institution is the red, right? So as we talked, we saw green letting off of the lows, right? So they were basically, once they saw that we could potentially be coming out of the range that we had been in, they let off their positions and they gave up their range, right? So as they were coming off of these highs, they were coming off of their positions and they were likely sizing into sales, right? And that you can see that the institutions were already adding and closing out positions, adding in, closing out. So they were selling. You can tell because they were. I take that back. I'm speaking in reverse context, but throughout this range, let's start in the range. So we talking about this low to this high, and all the way throughout here. They were supporting the range, right? The institutions were supporting the range. You can see that they were adding. And if you take a look, when I hover over certain points, you'll see the numbers and pay attention to this 28 and 99, right? And at this point, right here, 41 and 81,000, right? And they negative, right? At this point, the institutions begin to protect this low, right? And every time they get near this low, you can see that they're adding orders at these lows, right? You can see it once we get over here, they're adding here. So 41K over here, negative, right? Right before this low, they're 11,000. So they went from 41,000 negative to 11,000 positive, right? Even though they went from that's a negative number, so they had to add numbers to get this to a 11,000, right? So each time they got near these lows, they added on, right? Here's another low over here. They went from 11 to now 48,000 positive, right? So they added on again, right? Then watch what happens when we flip the market, right? Here. So they went from 48,000 positive to 71,000 positive, right? But they're done supporting the market at this point, right? On this day, which was right around the time when the war got kicked off, they flipped it, right? So they were at 71, then they reduced. So they were at 71,000 or 78,000, whatever that number was, and then they went down to 57. They reduced it. And at the time when they reduced, notice who comes into play. This your larger hedge funds. They start to short. These guys also come off of their positions and they start pushing the market down. As they push the market down, these guys push the market up. So, what we need to watch at this point, like we pretty much know where they're going to go, right? But what has to happen is that as these people were shorting, these people were pushing the market down and coming off their position. These guys were heavy, heavy, heavy short all the way through this move down. They are going to have to come out of those shorts, right? So what we're going to be seeing, we're going to see some crazy swings likely or some ranging as we start to push back up. And that's going to be those people coming off of those shorts. Because if they didn't exit out somewhere down here or as this was going up, that is going to mean that they are caught on the wrong side of the market. And because they're caught on the wrong side of the market, you're going to have to come out of those sales. And that's going to create more buying, right? And that's really the big thing that we need to kind of consider. As they come out of those shorts, because we have a new like bullish catalyst that the market may be running up because of the war might be ended, is going to be more people that are probably willing to buy the market up at this point. So as they come out of those shorts, we're going to go into a rotation phase, right? And that rotation phase will be uh short covering, right? And that short covering extends to buying, right? So just keep an eye on that, right? As we go into the next couple of weeks. I don't know if you have this website. I'm gonna drop it in the chat. This is barchart.com. You'll have to set up account. It's free. You don't have to worry about it. And then you just need to add this little indicator on there. It's called COT. It's called the Commitment of Traders or COT report. This come out every Friday. So it's delayed, but it gives you like an idea of what to expect, right? So we should see going into next week that how we'll monitor going into Friday when we get the number released on Friday, which will be April 10th, when we'll get this number and we'll see this on Friday, what how that number is going to affect. And once we get that read, we'll kind of know, longer term time frame with the technicals, how we can kind of expect this to play out. So, and again, we got some real drivers coming up this week. We got the CPI coming up on Friday, and we got PCE. So those two are our main things for the rest of this week. So, um, you know, that's going to be one to kind of pay attention to, right? Um, no change on the where are we at? Hang on. Fed interest rate. No change on the interest rate outlook as we go. I think it's still pretty much staying the same. Yep, 98% that 98.4% that we pretty much stay the same on the interest rate. So we don't really have to worry about interest rates right now. Looking like they're gonna hold. So before I go to the charts, anybody got any comments, question? Anybody want to shout out themselves? Like I think I see my homie that's also $1 million prop fund trader now, my girl Shanika. Hey, everybody just turn off your mic, turn on your mics, and give my girls some claps, man. Give us some
Congratulations.
claps,
Woo!
man. God, dog, boy.
Congratulations.
We got another. I got somebody on my
Congrats.
team with me who somebody else got 1 million in funded capital. Boy, like, ooh, like, do y'all know what she can? Do y'all know what we about to do with that? Do y'all know? Like, understand? Like, you have 1 million in capital, right? Just what does that 10% of that? If you make 10% in 1 year, that's 100K. That's $100,000. Everybody is shooting for this six-figure lifestyle,
Let's
right?
go.
Everybody's shooting for this. Like, tell me why she couldn't make 10% in a year. Why Shanika couldn't make a 10% in a year when she can do 10% sometimes in a day? Like, how can like do the like? Do y'all hear that? And that 10%, and that's light work in a year. Like I'm hearing 50%. Like let me see. I think she probably can do a 500K year on under the right circumstances. I ain't pushing nobody, but that's locked in, man. And like one of the people who deserve it the most, she been grinding. I don't know. I can't even remember what year I met Shanika, but it's been at least 4, 5, 6, 7, almost 6 years now, and she been
2019.
grinding. 2019, right? Okay,
2019.
grinding. Like she that quiet assassin kind of grind. Like you don't even know she be around until she just pop out with something. Like, but it be good stuff, man. And like all this stuff all this, and she just been going through all this like personal stuff. I'm not gonna put your business out, but just I know she been going through a lot, and just to see it all manifest, it's like all this stuff that you've been going through on the personal side, it's like been building that discipline muscle, building that patient muscle, building that focus, that consistency, because you still would show up no matter what's been going on with you, no matter what's been going on with the kids, no matter what's been going on with anything, you just been showing up. And that's the goal, man. Like that's really all it's about is just remembering to show up for yourself. And I just want to say I appreciate you for always showing like helping out and I'm proud of you, man. I'm super, super proud of you. I don't care how you get it. I don't care how it happened. I don't care if I wasn't the one who put you on there or showed you what to do. Like I don't care. I'm just glad you got it, bro. Like I'm super super proud of you, man. And
Dude,
I
I'm gonna give you a little bit of props now because you know I don't do ICT at all. You know I don't. But because I paid attention to you long enough, I noticed something about the Wix connecting, and that made my entries more accurate.
hey,
So I was like, oh damn, ICT is good for some kind. I hate it. But because you've been drilling everybody on ICT and stuff, I wouldn't have paid attention to that and known that little detail. And that's how the numbers start rising. So I do appreciate your help, Corey, over the years.
hey,
But
I appreciate you too, man. Like y'all need to like pick this woman brain, man. Like y'all gotta get out. Like this group is just like it's just I'm just using it as a means to hold myself accountable at this point. Cause it'd be the same five of us on these calls like all the time. Like so, but it's resources in here. Like I like send her a message or something. Like like a load of information. Like, and then I think yesterday or Sunday, Shanika, I think she posted the list of traders that you probably should follow. Like, go get out there and look around. Like, it's some stuff. Like, it ain't always got to come from me. Like whatever you need or whatever voice you need, find it. You know what I'm saying? Like, just make sure like you just locking in on this, man. You know?
I have a question for Shanika while we have her.
Oh,
Um, hey, like this Latrice, I was just curious, like, what was the thing that like really clicked for you that made it change and you realize, okay, like, look, I'm profitable and I'm just got to keep at it. That consistency, like, what really clicked for you?
journaling, literally.
Mm,
I swear
Yeah,
by
of
jour-
course.
mm,
I swear by it.
mm,
Yeah.
mm.
That's what Corey be getting on me all the time about. Like,
Mm.
Latrice, just take five,
Boy,
10 minutes and just journal.
boy, if I could pull my belt out right now, if I could pull my belt out.
Yeah,
Mm.
because if you want to know what your style is and stuff, you're not going to know unless you journal it because you're going to see what your mistakes are, what you're
Hmm.
good at. You're going to see what patterns you do when you win, what patterns you're making when you're screwing up. And when you get all those combinations together of what you win, boom, there's your trading style. You made a little black book of your trading, your own individual trading style that no one taught you. You taught yourself. And that's the secret. A lot
Mm.
of pro traders, I was lucky enough to be around high earning traders in my first and second year. And all of them were like they don't show you, you can see them on the screen all you want to, but they'll show you that their journal is right there in front of them.
Mm.
And I keep telling everybody they have a journal there. That's how they're documenting everything. That's how they're knowing when they're screwing up. That's how they know what their mistakes are or what habits they got. And
Mm.
they are it's like a religion to them. They are religious about their journal.
Mm.
And
Yeah.
that's how I found out when I was over trading. That's how I found out when like the
The
only
direction
reason
you
I can
point your
say
mind is the direct.
I'm not six figures now is because I wasn't compounded. That's
Mm.
it. Something simple.
Mm.
So journal will help you see where you need to go, what you need to improve, what you need to get better at, what you need to get rid of. And most importantly, your trading style is going to be really in that book. And you're just going to get stronger and stronger the more you put all that information together.
Mm.
Yeah.
Because you're measure because there's this quote that I was trying to teach my original trading team, and it was true. It was an actor that said it, and the quote was, "You can't improve what you don't measure."
Mm. Mm.
Mm.
Mm.
And
Mm.
that's
Mm.
what a journal does. It's your measurement, it's your results, it's telling you, it's your indicators telling you which way to go and which way not to go. And as long as you're using it, even if it's just for a little bit of your training, like if you only document one or two, whatever not, what did you see? What didn't you see? Can you improve? How did you win that trade? How did you lose that trade? What made you mad? Like put it
No.
all.
Yeah.
It's, it's going to reveal. It's going to reveal what your style is altogether. I mean, that's really what the secret really is.
Mm. Yeah.
Beep, 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 beep. I'm telling y'all,
Yeah.
y'all heard this before.
Yep. Yep.
Y'all heard this before. That's the crazy part. I feel like she just grabbed my mouth and pulled it off my face and then just used it. Cause this is something
Yep.
every that's all it is. That's it, man. I'm telling
Yeah, because I
please.
probably if someone's six figures or higher, there's a journal in front of them when they're trading. Everybody has one. Everybody. So that means if you don't have one, you're the one that's going to be broke.
Mm,
Literally.
mm. I almost spit my water out. Whew. That's it, man. That is it, man. And now it's easier for you to journal because you can use AI to do it. And you can use AI to review your journal entries. Like that's the best part about it. Cause as you get your journal entries, throw that stuff in GPT or Claude or whoever you got. Now you got your own analysis, your own review team, your own coach, your own person to calculate all your stats, and you can get the data to tell you what to do. That's all about that the it's in line with what I was telling y'all about when I was talking about that rule adherence, right? Is you can control you can't control the stuff you don't know you're doing or you not doing. And if you don't know you're doing it, you don't even know you need to make the change. You might change something that was actually working, but you don't have enough information to know whether it's working or not because you just think that, oh, like I can't trade breaking retests no more because it's been failing. No, your entry for the breaking retest failed. You weren't being patient whenever you enter on your breaking retest. You weren't waiting for the candle to close. You were anticipating the entry, but you don't know that. You just think breaking retests don't work. So now you about to go and change your whole strategy because you think breaking retest don't work, or you think that the EMA cross don't work, or you think ICT don't work, or you think this like, but now you searching for a whole new strategy, all because you didn't take the time to actually dig into what you were actually doing. I have my journal and I keep my journal in my Airtable. Even on the days that I don't trade, I still journal. And I showed y'all this before, and some people have access to this, right? This is today. I didn't trade. I did my and I learned I do a now I'm starting to do a pre-market playbook, right? I go in and I write down everything before I go into the market. And I'm gonna show you two things, right? This was from today, right? So in my notes, just in my regular notes, because sometimes I'm too quick, right? So this is just my notes. As I'm sitting in front of the charts and I'm looking at what I'm expecting, right? I'm just typing down what I'm thinking, right? Even if I don't take a trade, I'm still just typing down what I'm thinking. Hey, we up. This happened. It's a daily order block. We came through the yearly VIX gap. This did that. This did that. This did that. My expectation is this. If I was gonna take a setup, it would have been this or that or this, and that's what I'm doing, right? All of that, I took all of that, threw it in my chat GPT. Now I got information, right? Now I got uh now it's telling me because I've taught it how I trade by giving it all of my information. I've actually taught Chat GPT my trading style, what I look for. It knows all that stuff already because it's already got the information about this stuff anyway. But now it's understanding like how I actually use it, right? So I can get, even though I didn't trade today, I still get valuable information. Here it is, right? Like the main improvements from today, even though I didn't trade, things I can look out for later, right? Adaptability after liquidity sweep, right? You correctly identified chop the range, but when the range broke, liquidity was taken, condition change, that triggered your reevaluation. Late session playbook, right? That they recommended that I do that, right? That's something that I haven't considered, but it's probably something I can use, right? Avoid the late trades is usually my key, right? I don't like to trade. I like to have my entries in between 8:30 and 10:30, right? And if I don't have an entry in by then, I'm usually done because most of the times it's going into lunch session, right? And I notice because I've done the research on myself, right? So, but this is giving me information, right? I need to have a late session playbook. Like even though I look for certain trades during this certain time, if A then B happens, then I should probably look at it, right? And they are, recognizing the second opportunity days. Like sometimes there will be days when I will have setups that happen during lunchtime or during the afternoon. And that's true. Like usually I try to be done by 12 because I don't want to be on the charts that long. But I don't know that, right? Then I screenshot what I was looking for. This is what I was looking for. It played out to a key, like spot on. Because if we go, we sold off, we traded around this a little order block right here, and we bounced up off of this 67, 79 area. Actually, it's 79 was the low right around here. And then we pushed back up and we ranging back inside the range, right? I graded my setup, gave my improvements, my final, all that kind of stuff. And then now I got data. And I can take all of this information in here and throw it back into ChatGPT and just look at my and review my whole week and to say like, hey, what are some things I might need to look out for? What are some things? What was my P&L percentage? Or how did I do as far as my execution, all that kind of stuff. Like I can now track that stuff and I know where I can make improvements on. And like it's even telling me, like, let's go to the day I won on, right? The day I won, right? This is what the key insights from the day, right? Key insights from the day. You're no longer struggling to find trades. You are now learning how to fully capitalize on them. Bottom line, you execute at high quality trades. You manage risk well. You hit your daily goals. But and see, this is where I can find improvement, right? All that was great, right? You left significant portions of the move on the table. The final verdict: professional level execution with conservative trade management. Real talk important. This is where traders plateau, right? Not losing, you solve this. Not over trading, you solve this. Not forcing, you solve this, right? Now the problem is you're under extracting your edge, right? And that's basically saying that I could actually be making more money. But me myself, I'm in a phase right now where my goal is $1,000 a day in my 300K accounts, and then my 150 account is 500 plus per day, right? So soon as I see that, I cut. I don't play around, right? I'm usually cutting, right? And that's basically what this is reasserting, right? That this is what I do, right? But this is telling me like, hey, you could actually be making more money, right? And I'm in the process of working through that mentally, but it's just right now, I want to hit my buffer goals before I start to do or make any changes, right? And if I hit my buffer goals, then that's where we can start going to our payout. So I know right now my buffer goal for those 300K accounts is $7,600, right? So right now, I don't need to be focusing on extending my wins. I just need, at this point, I took a hit a little bit yesterday, but I think right now I'm about 34% of the way complete. And when I'm referring to 34%, I'm talking about 34% of the $7,600, right? So I only need to make up 60 something, 64% more to get that 7,600. All I need to be thinking about is, hey, every time I make $1,000, that's another 20% of that, another 20%. So I only got to do, I'm at $2,600 or something like that on roughly each one of these accounts, right? And that's even with taking a loss the other day, right? So I only need to make four more trades, really, four and a half more trades, right? So that's why I'm only focusing on that $1,000. So we can, and eventually the goal is I will be extending my wins, right? Then as we go on further, you're under extracting your edge. What this means going forward is you don't need better setups, better entries, better bias. You need better hold discipline. And that's a thing that I will work on once I get over my buffer. So again, this is telling me, right? I don't know that you don't know you need to make this fix if you're not tracking this, right? You might know it, right? You might be able to guess it on your own, right? But you don't act, if you're not journaling, you don't actually see it. And that's the difference, right? You need to see it and you need to feel it. So that way you know that it's something that need to be changed, right? That makes sense. That makes
Yeah, 100%. Like, I think it clicked to me. I need to do this because I know what I am doing, but exactly where I need to improve. Now I'm listening that. Yeah,
yeah, yeah.
definitely. Yeah.
I
Another
also,
thing, go ahead, Shanika.
yeah, I also want to add, your what you recorded is good feedback. Like when you're in a slump, there's something you did in the past that had you on a win streak and you documented it. And if you're in a slump, you can go back and look at that information you wrote down and see what that was. And you can ask yourself, hey, did I do that? No. Oh, well, that explains it. I did that many times when I was like in a slump or my entries are off. I would go back to my past information to see how I would win this trade, win that trade, win. It's information, it's data, it's telling you what worked for you. So you don't have to go searching anywhere on YouTube or anything. It's in your journal, it's in your past entries. And
Hmm.
I did that a lot. And a great way to understand how relatable this is, or how often people do this. Athletes document their training all the time to see where to improve. Athletes do it. Entertainers do it, artists do it. Everybody that has a very strong a professional craft has some kind of way of documenting their what they're doing to look back on it to review to see how to improve and get better. So journaling is actually the secret to you, like jumping over the hurdles or whatever you're stuck at, or you feel like you're moving just only an inch and not like several feet. Journaling may be the answer to help you solve what that little hiccup is. Because I guarantee you, when you start journaling, you're gonna realize it's not big problems that you're having, it's little tiny ones that you can't see. You're overlooking very easily. It's usually a little detail you may have missed. And you won't find out until you start documenting what you're doing.
Got
Gems,
it. Thank you.
Man, this
Thank
is
you,
good.
Kanika, for
Thank
this
you. Thank you for
nugget.
sharing.
Yeah.
gems,
Yeah. Really
gems,
appreciate this.
gems. Ooh, I love this. This is like, hey, this might be the best session of the year right here. Cause it ain't coming out of my mouth. Y'all hearing the same thing, but it ain't coming out of my mouth. Cause I've been saying this. And I just again appreciate you, Shanika. Appreciate you, man. Cause again, that's where the change. I can think back the best times when I've been trading is when I've journaled intensively. And now that I've been customized my own journal and all this other stuff, and now I've been reviewing my data more often, I've been able to capture more information, make better decisions, um, control myself more, not make as many mistakes. And then I think what I told y'all again, right? Trading, I told y'all this like maybe one or two sessions ago, right? But trading is there's two things that is really involved. There's your leading indicators and your lagging indicators, right? You can only control your leading indicators. Your leading indicators are the things that you can do to control yourself. Your lagging indicator is the money that you make. That's you don't have no control over that, right? But what you can do is, A, you show up every day, you journal, you follow your rules consistently, you whatever your bias is, you mark your charts up. These are all things that you actually have control over, right? You journaling every day, you making sure you get enough sleep, right? You making sure that after you trade, you review your notes, right? After you at the end of the week, you review the notes you review your week, right? And then at the end of the month, you review your month. Like those are all things that you can actually control. And the more you get control of the things that you can control, the better your lagging indicator, your money will look. Because if you just showing up consistently, doing all the things that you're supposed to do, you get into a habit of controlling your emotions. You get into the habit of controlling your discipline and being consistent, right? Your money won't have no choice but to follow. Your money gonna be like, dang, bro, like he doing all this stuff. I need to do something too, right? He waking up every day. She waking up all the time. She coming on all these calls. She journaling everything. She actually adjusting based off her journal. She drinking more water. She focused. She did some yoga this morning. She did her gratitude journal. She did her all this stuff to improve and follow. And it's like it's it is you're gonna attract the money. You're gonna attract everything that you working towards because success follows discipline. Like it follows discipline. Like you can't help but be successful if you continue to be disciplined and if you show up for yourself. And that's really what it is. In the video that we were watching before we got on the call, what separates winners from losers? It's the people that show up for themselves are the people that's winners because you understand that you don't look at discipline as a punishment anymore, and you look at it more as something to be grateful for, right? Be grateful that you get to journal every day. Be grateful that I can trade every day. Be grateful that I can review my notes. Be grateful that I can work out. Like, don't go in with the attitude that, oh man, I got to go downstairs and get on this treadmill. I got to go to this gym. Change the thought, right? Change, and that's how you get over the discipline part, right? Because a lot of times we look at the negative part of the discipline, and it's always an issue with our discipline because we have a negative connotation about being disciplined, right? And a lot of people, we it's not even our fault that we think like this, right? Because I don't know about y'all, but when it refers to discipline, there's usually a whooping behind that when I was a kid, right? So for me, is getting disciplined is go sit in the corner, or you getting this belt, or you getting a timeout, or you get something taken away from you, right? That's where we have been programmed to think about discipline, right? We've been programmed to take a negative tone towards discipline when in reality it's the exact opposite, because the more we do something, the more we get. And that's what discipline is. The more disciplined we are, the more we get and bring to ourselves. The less disciplined we are, which is what we actually operate in, the less we get, right? And the less we do for ourselves. And that's the way we need to reconfigure our brain. Think of it as every time that you do what you're supposed to do, you're actually adding towards your wins, right? That's really what's going on, right? You can't go into the gym one day and just be 300 pounds less or 200 pounds less, right? It's at steady chopping, that brick by brick. I think I told Jason, I appreciate you for getting on the call today. I told Jason this the other day or today, I think on the post, like brick by brick. You don't know, you won't get the information until you start putting the bricks. Will Smith quote, I learned how to lay the perfect brick. And then one day the house was built. That's kind of the concept of it all, right? So, man, best call of the year right here. Discipline is what has got me through this rough patch. Facts, Jason. Like that's really all it is, man. Really, really all it is. So I don't I don't even know. I'm just gonna send y'all my charts. I don't even know if we need to talk about this chart, man. So because this was the gems for the night right here. Um I think I think I don't know if like I've given this, I don't know if anybody, I think I've given this out already. I don't know if y'all want this, but if you want it, send me a message and then I will show y'all how I got it set up. But this is more for smart money. I can I can show you how to build your own Airtable if you want to, but that's a like a that probably need to be like a whole like hour or two session or whatever. But this is how I keep it, right? You can do this in Excel because this is all just like an Excel sheet, right? But I just like a digital version of my journal because, unlike, I mean, write it down on paper, however you want to do it. I just prefer the digital because I can easily take my digital notes and get data from that quicker. That's the only reason why I prefer digital over writing it down. And but if you are a write it down kind of person, go right ahead and take advantage of that. But another way to journal that I also do is I usually do an audio note on my phone because my brain think faster than I can write and faster than I can type. And the only thing can keep up with my brain is my mouth. So I just usually will do a audio voice note while I'm trading. So I'll be sitting in my room in my office and I got my audio recorder on and I'm just talking to myself in here, talking about everything that's going on. And then I could just get the copy of I can just from my voice note I could just pull the transcript from that, and then I can use that to throw it in the chat GPT, throw it in my journal, and then confirm everything is good. And then I got everything I need to do. You know what I'm saying? So that's just another way. I'm a I don't know. Like do we need to do like a journaling, how to journal call? Do we need to do that? No? Okay. Cool.
Means we
Yeah.
can do that to say that means
No, yes,
I am
we do
doing in
that.
same, yeah, I'm doing in same way, but yeah, definitely I'm looking for improvement. So if everybody wants that, then we can do.
Yeah, that was going to be my question.
Okay. Okay. Okay.
And one question, like, right, as you said, you are recording, not writing, right? So, like, I am doing same thing, but like, if I'm starting on 8, right? So, preview market, right? So,
Hmm.
till trade 10, 11:30, this is too long. So, all goes in one note, or you are cutting that off, or again doing some compact.
No, no, I'm not just like sitting the whole time with the audio recorded, right?
Okay.
But like as I'm like either, if I'm typing my notes or writing my notes, just certain things that happen, like, I'm just making sure I take note of that. Like let's say for instance, like today, like if I was looking at today on this, right? And before when the market opened up, I was looking at the high we had made, and then let me see, let's go to ES. It was on ES, right? And going into pre-market, we had already made this high right here. Let me put my cursor on. We had already made this high, right?
Yeah. Yeah.
And then we had made this low, right?
Mm-hmm.
And I told myself, like, I'm bullish, right? I'm not gonna take no sales. I don't
Mm-hmm.
care what happened. If a sale happened, that's probably going to be a setup for the buy, right? If the trade happens between my 8:30, 10:30 window, I would take a buy, right? So when this is the high, this is the low, right? We took the low, over here around 9:50. This is something that I would have put in my journal, right? This is
Mm-hmm.
something. We took the low, right? Then we traded into this little rough area over here. This is probably like a 30-minute order block right here. We traded to the order block.
Mm-hmm.
That's something I would have put in my notes. Then we set the low right around 10:30, but I had already walked away. I had already been done for I didn't think we were going to get it. I thought we were going to actually push down lower, but this is actually a trade that I probably would have taken, right? 10:30, we got this. Then we got our low at 10. Oh, so it wasn't at 10:30. It was at 11. So yeah, this was out of my window, right? But on the 5 minute, we got the low at 10:55, right? So yeah, this out of my window. But then I got an entry confirmation, probably right around here, right around 11:15, looks like it. Yeah. I would have been able to take an entry right around 11:15, maybe on this candle or one of these candles right here. So this may have been a good setup, or maybe I'm taking it over here at 4:55. So for me, this is something that's showing that my setup took place, right? So this is something that I would have noted, right? For me, I want to know, hey, when does the A plus setup happen for me? For me, this is an A plus setup. And I would have had two opportunities to get to it because I would have been able to get in once this low was set on the initial run throughout this price action, or I had to wait and then I take it over here. My targets, I would have noted that my target would have been this high, this high, this high, and this high, right? We would have been able to get two of those targets on this, and that's what I would have noted, right? But am I talking the whole time throughout this? No, I don't need all of that information. I just need key information in regards to my trading style. If I'm a break and retest person, right? My note would have probably been something like break below this low or break above this high. My entry over here, this candle close to create the break, this candle close to create the re-entry. My again, my target here, 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 and here, right? Same process, different trading style, similar information, but all pertinent to what I trade and how I look. We could throw some EMAs on here, right? It's the same thing, right? It moving average, exponential moving average. Oops, hold on. Get that off of here. It could have been the same style, right? Moving average. EMA. We throwing this one. We're gonna throw on two, right? Because across, right? This one, moving average. Let's do, I know a lot of people do the 10, 4 and the 10 cross, right? So we're gonna do the 4-day moving average. We'll throw another one on there. We'll do the 10. Okay. Um, and then let's make the 10 red. It's another trading style, right? Okay. If I'm a moving average person, right? Let's do this a little bigger so we'll know when it actually cross. Okay. I want to know my notes would look something like this. Okay. Once we make a low, right? And I've confirmed that we have rejection. And this answer your question, Jason. I don't look at the actual candle patterns, right? You know where they talk about dojis, all that other stuff. The concept of the doji or the hammer or all of that kind of stuff, it's just telling you basically the insight of the market. It's exhaustion. That's all it is. To simplify what a wick is just exhaustion. And if we got a low, that means we got an exhaustion of buyers at this point. The buyers are tired. They can't I mean, I'm sorry, the sellers are exhausted. They can't sell no more, right? This wick just says, "Hey, I'm done selling at this point. Now it's time to buy." And I think the example was we had two candle here, right? Okay. These two dojis, you can name them whatever you want. At this point, this is telling you the opposite direction. I'm There's an exhaustion in buying. This candle confirms that there's additional buyers in the market, and this candle just confirms that they tried to sell. So like in this case, this is sellers being done. This is buyers attempting at this point with these two candles, and then this is the follow through on the buyers. That's basically what they're saying. You can put any kind of name on that, and you can call it blue ivy, and it's still going to mean the same thing. It could be Death Cross, Death Valley Doji Cross. Like it can be anything, but it's the information that it's giving you, and it's just showing that one side of the market is exhausted versus the other side. The wick on the bottom show you that sellers are exhausted. The wick on the top show you that buyers are exhausted. That's the simplest way that you can put it. And then the next candle is gonna give you the confirmation to tell you who took control. That's it. It could be anything else. So if I'm looking at this, I'm a moving average trader. All right. I want to buy when the four across the 10, right? So my notes for me is, you know, we are pushing down, right? We've made a low. We established we got a 30-minute order block. I don't know if you use order blocks or not, but we've established that we got a low. And we seeing that we got a wick rejection here. I see that we got a cross on this candle on the 5 minute, and we got a break above the 4 and a retest on the 10. My entry is that. Again, I'm staying in the trade I think a lot of moving average people, they stay in the trade until they see they get a cross again, right? So, or they reach a certain high. So I'm staying in the trade. My targets are going to be, uh, I don't know if you necessarily would have a target. Maybe it's a 5 point target, or maybe that's how you want to do it. But in this case, okay, before we even came back near the 4, came near the 10, we were near this high, right? That's something I will put in my notes. We confirmed a continuation when we bounced off of the 10 again. We got a high, and then we held the 10 again, right? I'm staying in the trade. I stayed in the trade. That's another note that I might put. Then we got another high. We traded near this high. We finally get across. This is where I decided to close out some partials because we actually got across here. And then I closed out the rest of my trade when we got this. That's my journal notes. That's I'm explaining in my notes like how and why I'm doing certain things and the decisions that I'm making. That's the main concepts of what I would be getting out of this. And you notice I don't trade moving averages. I know how to trade them, but I don't trade them. But it's the type of information that I'm giving myself that I can use later. That's the main thing about this whole situation, right? Again, here's another cross over here. I get a break. There's a cross. I get the engulfing candle. I get the candle to close above. I have another candle to come back and touch it. Here's my entry, my stop loss below there. That's the kind of stuff that I'm putting in there and I'm using so that the next time that I can go in, I'm putting my entry, my stop loss. When did I adjust my stop loss? Why did I adjust my stop loss? Uh, did I add on? I'm putting if I added on size, why did I add on size? If I add on size, what do I feel like when I add on size? Do does my breathing change? Do do I feel any different? My body feel any different? Do I tingle? Did I impulse? Do I have any impulsive feelings right now? Uh, did I add on a pullback, or like that's the kind of stuff that I'm writing and I want to know about myself that I'm doing, right? And you'll notice that here, right? In let's go let me see here. This is a losing day, right? And here you notice, right? I was patient initially, but I rushed. I felt FOMO. I was a little impulsive. Overall, I was focused and locked in because I actually managed to make money on one of my accounts, but I didn't manage the trade properly, and that was because I just didn't feel right. Like it was something going off on me that day. So, and the market was moving a little too quick for me to manage both of my accounts at the same time, right? I did add on, right? Um, and then here's another thing. Take my original setup first. Before I take any other setup that let before I take any other setup, let that setup play out first, right? Before I start looking for outside, because on this particular day, I was bullish. I took a short, I took a loss that I should have never took in the first place. And on top of that loss, I added on to that loss by adding additional contracts. Because on this account, I trade 20 contracts each. So I added another 20 contracts and I took a bigger loss than I should have. But again, now I know to check myself on that, right? Whether the trading style, fib, right? If you a fib retracement person, right? I mean, I could give you 10,000 examples, right? But it is a similar process, right? It's a similar consideration that you want to take when you are journaling, right? And whatever that approach is, or whatever style you trade, the information is similar. May not be exactly word for word, but it's certain things you want to make sure that you journal, because that's the important piece. Like things you can measure are really a lot of the things that you want to get journal. Like you want to measure your targets, your ads, every time you add, you know, why you took the trade, and back to some of those examples that I just gave. Let me look through my notes again on some other days. Let's go on this day. Let's see what we did over here. Okay, on this day, it was clean, but I was hesitant. I went on tilt a little bit, right? And I chased, right? So again, listen, look at my notes on the lesson learned right here, right? I didn't feel comfortable adding on the size on the 300K account. In this scenario, and because of that, I closed out the trade, even though I would have won the trade. I am glad that I realized the feeling I had to make that decision. I don't know what I was make that decision. I know that it was I know that it wasn't an A plus setup. So this is me self-correcting, right? I know it wasn't an A plus setup, right? But I sized up, and I immediately caught myself for sizing up. And I still did what I was supposed to do as far as let's see. On this day, okay, I pretty much broke even on this day, small losses, but scratch, right? Then in this account, I did what I was supposed to do. I didn't size up on this account. I did exactly what I was supposed to do in this particular account, right? So again, I'm self-correcting, right? And I'm making the changes that I need to make for myself based off of what the information is telling me to do. My own information, my own details, my own notes, my own journal, and all that stuff. I think this was the journal call. This was the journal call. Like, this is actually it, right? I think this kind of goes over that, right? Would you agree? Would you
Yeah.
guys?
Yeah.
Yeah, I think so too.
Mm-hmm.
Okay. All right. So now charts, dollar. We gap down, right? We gap down from yesterday open. We got a gap at 99,516 down to 98,951, right? We already traded into the gap. That's where our high is for the day. We got the range between the low a day and the high a day from yesterday. We are likely high probability we take out the high from yesterday. And then on this gap, you can see we traded through this old new week opening gap. We took all of this liquidity out. This previous week low, this previous day low, this one, and this one. So all of this is gone, right? We don't even need this on the chart anymore because they took that, right? I'm gonna leave that gap, but and then I'll leave this previous week low just to know that we took out a previous week low, right? We set our low near this previous week low and near the daily fair value gap that's below us. If we continue to go lower, our first move down is likely coming after this low, or we stay inside of this order block right here. That's one or two moves. So this one could be inside of this, or we could go ahead and tap outside of this and into this fair value gap. The other thing is this one could push down to this yearly opening price. You know, this is a magnet. So this yearly opening price is likely a draw on liquidity, right? It's likely a draw. We already didn't drop down this low. Why wouldn't you come to the yearly? That's one thing. The one way to look at it. Whether it happened today, tomorrow, I don't know, but that's high probability right there, right? That could happen on the one or the three swing, right? And this two could happen if we get some sell off after we decide what we're gonna do with this order block. I'm not gonna put it on there on this chart, but just know this is an order block right here. These three candles right here. This is a bullish order block at this point. But this isn't a high probability bullish order block because we don't really have a fair value gap in between there. And that's what make it more important. Let me just double check. We got one on the 4 hour. So this might do something, right? This will might do something. I ain't gonna put it on there. But we're pretty much at the middle of this gap from the news, right? So there's another quadrant in here. There's a gap in between the middle and the high. There's the upper quadrant that's probably right around 99, 30, 38 area, right? Let's throw that on there. I'm not gonna leave it, but let's just see what it is. Yep, 98.38. So that's the 25 level. That's 25% of the gap from yesterday, right? So at this point, this is probably going to give us something. I don't know if we get a high, we get a high, we get a rejection. We'll probably react to something around this area, right? And if we're going to continue to go higher, we'll get a retracement on the 1-2 move. And if we want to stay higher, we should get an order block or something around this area to give us the 2-3 move. And our 2-3 could potentially push us out of this gap into this inverted gap near the monthly. Again, another magnet. The monthly opening price, that's another magnet. So we know that this is likely if we get a high or if price decides to come up that way, it's gonna want to touch that area at some point, right? This is our weekly opening price. If we get the three around here or somewhere above this, we get a retracement likely from that. If we're gonna just go ahead and sell off, it could also happen here too. That would start a new move to the downside. That means that our four would have to hold somewhere inside the gap. And that means if we get the gap hold, we get the five up here to run back after the weekly high. And you see we got some other points of interest above here, right? Same over here. If we get the bounce near the yearly, that's the three. The three can start the new move up. If we get a bounce off the yearly and we want to respect that, you'll see a new trend start. But if not, we sell off at the four inside of this fair value gap, and then we take out the three, we trade below the yearly opening price. You should see some type of, if we're going to trade below that, you should see a gap through that, or you should see price stall, and then you get a whole new setup around that. So, and then if not, we go ahead and just trade down through this daily fair value gap, right? So this is what I'm looking out for dollar for the rest of the week is one of these to play out. The other scenario is we just go sideways. If we just go sideways, that means it ain't something that I want to be bothered with. That makes sense? Tracking?
Tracking.
Tracking. Okay, cool. That's dollar in the chat. Then we got gold. Sneaker baby. This sneaker baby. Um, got a small little range. We got a swing high from the lunch high at 12. And then we got a low. We just tapped it right here. That's the previous day low from the 4 o'clock close right here. Then we have this daily fair value gap that we already been using. We bounced off of it here, 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 and here. And then we took out previous week high. So that's telling you we're pretty much pushing higher, right? But we have a fair value gap that we have already inverted. So this is a kind of a 50-50 situation because we traded through it already. Technically, we haven't closed below it. So it still could be bullish. So let me actually change the color on this. I don't want to extend it out right now because I just want to get an idea of how they're going to use it. But this is still bullish right now because we haven't closed below this. And I mean closing below this low of this body, right? So this could still be bullish. If we still bullish, then that means we'll trade into this 4 hour fair value gap and we'll have to see how they use that. But if that is used, you'll see the price trade above it and then close above it and then push higher, right? There's a lot of trend lines liquidity right here. So we'll be sweeping that liquidity if we trade higher. But overall, this is our higher time frame point of interest, this volume imbalance. For those that don't know what that is pretty much a gap where the wicks touch right here. That's what that is. This is a pull. That means, again, a volume imbalance is basically missing price, right? And that means one side was too strong and they need to come back and replace these orders, right? And you want to draw it from the close to the open in this case um because it's bearish. The price closed here, it opened here, you draw that, extend it out, and then there's your levels you want to pay attention to, right? So if we do continue up higher, this high is the high of the week. inside of this body, that's likely the draw. Now, we are kind of far away from it, so it could hold inside of here somewhere. This one doesn't have to take this liquidity because we took this already. Doesn't have to take this. It could go in here and stall. But if we get in here, take the high, stall in here somewhere, that gives us the setup for the 2-3 to take out this liquidity if it hadn't been done already. And then the 2-3 takes and closes above this old liquidity over here. And then we likely get our next push down and a rejection, or we hold and we continue higher because this is our next draw at this previous day high. If we sell off from where we are right now, we have this area of liquidity, this area of liquidity. This is the low of the week right now. So, and this pretty much equal lows right here. So, equal lows means they're going to want to take those, right? And then we got another low here and another low here. They're going to want that to take that out if we see price go lower. We already know that's going to be magnets, right? But we got the monthly holding us, right? And the monthly is holding us right at the fair value gap from the daily. That is, let's look at that. That fair value gap on the daily is this one right here. From this wick to this body, extended it out. And we've already tapped it 1, 2, 3 times. So you see we kind of using it. And you see we took this high and we set the high inside of here. So the question is, if we get back down to the monthly, are we going to hold the monthly or are we going to give it up and then go and take these lows out? That's really the question that we're trying to make. We've taken a high, we rejected a high, and now we coming off the high. Just like we talked about before, the wick is telling us that the buying is exhausted. So the sellers have somewhat priority right now, right? That's what this wick telling us. So because that, it goes in line with a potential run below these lows to reach some bigger entries, right? Where we could be coming down further into this. There's an order block right here, there's a gap right here, or whatever the case, if we were to go lower, or we just want to take these out and then go higher. I don't know. It don't matter what it does, it just matter what we see when we get our setup, right? And so if we do get the downside move, these are all our liquidity right here. This is our main area that we could potentially buy from inside of the fair value gap. So I don't want to, let's just say we get our 2, 1, 2 right here inside of the gap near the middle. Our 2, 3 move just takes this low. Possibly we get down into this old gap right here from last week. And then if we get the 4, that means that we're done with this area and it's going to be used to sell from. So that's where the 4 sells off from here. And then we could go as low as this previous week low. We could get a bounce in the 1 or the 3 area, right? Okay. That makes sense?
Yep.
Okay. This is gold. Then we got VIX. I love VIX, y'all. This is one of the biggest tools that I have incorporated this year. And to me, if you're trading indices, you should be looking at the VIX. Like the VIX has been the sauce, man. It's been everything, right? The VIX opens up at 3:15 a.m. It closes at 9:25 a.m., opens back up on the 9:30 candle, and it closes again at 3:30 p.m. on Eastern Standard Time. The VIX does the opposite of what the indices does to a T in most cases. I don't know what the percentage of it is, but it's almost 100%. Let me not put a number out there, but in most cases, it does the opposite of what the indices does. If indices making a high, VIX is making a low. If VIX is if indices making a low, VIX is making a high. If indices is ranging, the indices is probably ranging too, right? And because of that, you can use this to time your entries. You can use it to help you get bias. You can use it to help you uh, make your executions, and you can also use it to help you know when to get out of your trades as well, right? So, um, another chart that I use is over here. This is what I actually trade from. And I want you to watch the cursor as I go through the different charts. I'm going to put these on the 5 minute together side by side. This is S&P over here. This is VIX in the middle. And this is NQ, right? This is a interactive portion. So if I want you to say something turn your mic on. All right. So starting at 3:15, this is when VIX open, right? Notice where the cursor is on each of the on S&P and on NQ, right? So let's get the 3:15 area right here. 3:15. Okay, so this is roughly 3:15, and you see where all we are lined up, right? This low at 2018 is associated to the high on ES at 68, 40, 50, right here. It's also associated with the high that's made on NQ at 25 to 45.25, which is here. This high that's made on VIX at 2061 is in line with the low that's made on ES, roughly around 68, 28, 50. This high is with this low. What is this 2217 high associated with on ES and NQ? This is a turn your mic on portion. Nobody. Nobody wanna. What is the 22 point
This is low, 68.10, right?
is associated with what? What is this high associated with on VIX?
Means 22, 317, right? Sorry.
2217. What is this associated with on ES and on NQ? Let me make this smaller.
This low, 68.110, means 68.10.
What low?
68.10.
This low?
Uh-huh.
No. Nope. So
Hold on.
this high is associated with what on ES and on NQ? Anybody? Nobody? Need me to show it? Okay. So this 2217 high is associated with this 6779 low on NQ. It's associated with the 24,926 low. This is the low of the New York session. This is the high of the New York session on VIX. And if I'm looking at timing, right? And I see VIX nearing a high. I see VIX doing what it's supposed to do. I know VIX is coming back into the gap. I know we're near the middle of the gap, which you can see on the other chart, and we get a high. That can help me confirm, hey, I might be getting a buy signal right over here at the same time I'm getting this sell off.
Okay, okay. I got confused actually. This
Yeah.
line is your indicator, right? So at 68.10 there is also line. So I I got confused with that line.
Yeah, that's the end of the day.
Mm-hmm.
Yeah.
Mm-hmm.
But this lines exactly up with this low and this high right here. Just like this right here, this 2188 lines up with the re-entry over here. If you were taking the buy, same thing over here. It line up with a re-entry if you taking the buy on NQ. And once we get to, if we were to get in a buy at this 2217 or near this 6779, this high right here that we made right here, and this high that right here that we made right here is in line with when we make the turnaround on ES, right? So this 2059 is right when we make these highs at 68.29 and 68.31. This is showing you the exhaustion, right? So this is confirming, all right? I know we were going to take a target here. I also know we were going to take a target here, but is this done or not? Because if it's done, if this if this was going to keep going, the 2059 low would be getting taken out at the same time. And we would be getting highs taking out this 37, 68, 68, 36. But instead of getting this low taken out, we get a high taken out. So this is a sign that this is done right at this point. So this is a tool I use that uh to help me to get confirmations with my timing and all that stuff. I can go on for days about this, but I just wanted to show you that before we talk about VIX, right? But anyway, VIX low, high. If we sell off, we take this low. This is in line with us buying on in QES and Dow. So if we're going to keep buying, we should be trading down into this fair value gap, right? And we should not likely get any attempts to buy back up on VIX until we get deeper into this daily fair value gap. Because we've already seen that the momentum is bullish. So that means that VIX should be selling. And where it should be selling to is the next higher time frame point of interest. That's this fair value gap. And the three levels is the high, middle, and low. So we shouldn't really get no interaction with selling, I mean with any buying until we get inside of here. And we got this liquidity right here around 1843, which is right around the middle of here. So we probably won't really see any buying on VIX until we get right around the one. Did my mouse just die? Yep. Dang, my mouse died. Okay.
Which
We won't.
which day daily FVG is this? Because mine is lower is 19.90.
Okay, hold on. Let me find it. Let's take this off. So I don't think this is, I think this is this gap. I might have got it labeled
Lower,
wrong.
lower one, right?
I don't know. I think I got it labeled wrong. I think I put it as a fair value gap. Let me see.
Okay. Mhm.
This is in the daily. This is a hmm.
Because right now that is inside the daily FVG,
I
upper
got,
one.
I might have got this
Mhm.
labeled wrong. Yeah, it looks like I got this labeled wrong. What was I looking at? 4 hour. Okay.
4 hour.
Yeah, it's on the 4 hour. And it's not 100% in line. I'll take this 4 hour. Yeah, this okay. What's the low on this? 1947. Thanks for that. Thanks for catching that, Anna.
Mhm. It's okay. Thank you.
And so this is a 4 hour. Oop.
It is 12 Feb, right? Okay, I
Yeah.
got it.
From
Yeah, already tapped in that FVG, right? Yeah,
once.
once, right? Mm.
Yep. Once over here. Okay. All right, cool. So again, and then let me just recheck the daily right quick. Dang, mouse. It's a lot of chop. This a volume imbalance. We could use this. Let's use this instead, right here.
Yeah, that is what I'm saying.
Yeah, let's use that instead.
It's already there, right?
Yep,
So it need target.
yep.
Instead of this, we can use the 26 Feb, right? 26 Feb on 4 hour.
On the 4 hour.
Mhm.
Let me just double check something.
Yeah, yeah, sure.
Let me take this stuff off. Yeah, about a monthly. Let's use this monthly.
Okay. Yeah.
Yeah, let's use this monthly one. Um, nah, let's just use that one on the daily. Yeah, let's just use that one. That's better. That's giving us what we need. Okay, so this is 27. And then this is I don't have nothing for this. Okay, let's make it. Sorry, y'all. Okay. All right. So either way, right? The price is gonna need to come in here. And then that's likely where we can get a bounce from. If we come down into this area. this 1928 down to 1863. And then we sweep this low, and we could even come and take out this previous week low. Then, if we get down below this low, same thing. This is a magnet. This is the yearly opening price. Okay. If we push up and we do get some kind of selling come in, right? This high is the high, the last high we made. So you know that's going to be an area that they take out, right? Then the next area is going to be back to the middle of the gap. If we get to the middle of the gap, then we got the monthly opening price. That's going to be why we got the rejection possibly happen here if we were to get a new move back to the downside. Because we got the monthly and we got the weekly. That's going to be heavy if we get back up there, and we likely see either a new move to the downside or at least a pullback going higher. And that's why we got the four here, and we got the 4 or 5 move would be trading back above the monthly and the weekly. So, but because we are heavy bullish right now because of the news, I will look for this downside move to happen first. And like I said, take some time with VIX if you get a chance to. Take some time and study VIX. Um, study it on the higher time frame is study it on a higher time frame, but study it more on like the 4 hour and below is my recommendation. 4 hour and below will give you the cleanest look. Because what you'll notice is, on the daily, you're not gonna get like the uh clean looks, right? Because the daily candles, they don't move at the same rate as the indices. So you won't get the over exaggerated moves or whatnot, but you're focusing more so on where do you see a high, where do you see a low, where do you see a high or low, you know what I'm saying? Where you see reaction off the yearly opening price, the monthly opening price, where you see the gaps and stuff like that, because usually they're in line with some bigger move on ES or NQ or Dow or whatever. So, but when you start going down to 4 hour and below, then you notice the highs and the intermediate highs and the intermediate lows, and you can line those up a lot cleaner with the VIX on Dow and the rest of the indices. So to me, like I don't even like trading without having VIX present at this point because it's just so accurate, it's so spot on. So um this is Dow. So we got Dow. We created a new fair value gap on the 4 hour with that big impulse up is huge. So, uh, you know, because we could have some selling come into place, we could see we could see us come back down into it. This is the swing low from today. This swing low right here. This is first area that I would be looking out for. Then we got the previous day high. This is the weekly high for now. One thing already standing out, right? And this is pretty much how I look at stuff, right? The first question I ask myself when I come to the chart, right? And again, this is another turn on your mic kind of situation. Just looking at where the last swing low and the last swing high, which is the weekly opening price, and this low right here, this low and this high. First thing to come to mind when you look at this chart is which one of these are likely to get taken out. Turn on your mic. I don't want to hear Anna.
I
Anybody
was going to
beside?
say maybe the low.
Where is price currently?
Dang it, Corey, you're going to make me get my glasses. Hold on. I'm refusing to wear my glasses.
So the first thing I'm asking myself, if I'm coming to this chart, what
So
am I
price is
doing?
at price is at 48.90
Yep, roughly.
roughly.
It's 48 48 487074. And I'm looking at this. Am I likely to take out this high or this low?
The high. You're closer to the high.
I'm closer to the high. Okay. So now I'm already got a somewhat of a bias, right? And what would be something that I would need to see in order to change that from being my bias? It's an easy question. There's nothing crazy. So if I'm saying that the high is likely to get taken out, what am I gonna probably be looking for? Buys, right? That's it. I'm gonna be looking for buys, right? And then if I'm looking for buys, what's probably the first thing is gonna shoot for? What is that? That's the yearly opening price, right? So I'm already knowing going into today that here is something that everybody's gonna be looking at. Everybody's gonna be looking at the price of Dow Jones getting above the yearly opening price. Why is that? That's because it's a major tell about economic pressure, about the economic stance right now. If we just went down, I think we were down 10% on Dow, and now we're above the yearly price. Isn't it, is it something good for us to say that we went down that far and now we're back up at break even on the year? That's a good thing to say with us being down so far. So what is this? What does that do to the psychology of the retail trader, of the hedge funds that we talked about earlier? What does that do to their psychology? And this is also a turn on the mic situation. Y'all know
I'm
this.
not even gonna lie. After I got the last answer wrong, I'm sure.
So if I'm a retail trader or anybody and I've seen that we came off of lows, this is giving me the and let's just say, I'm an investor. What does this say as if I'm an investor? This tells me, hey, somebody's buying. We're buying again, right? This is all this telling me. Now we near the yearly. We coming up off these lows. We got some good news. They done ended the war. We can likely start buying, right? Because we done seen this move right here. We seen the low of the year over here. We seen this move right here. So we got technical reasons to be buying, and now we got a catalyst to be buying. And if we can get above the yearly opening price, I think I might have got in at the lows of the year. That's what I'm thinking. If I'm somebody who was buying down here and buying over here, I'm thinking like, oh yeah, I'm about to take this and hold this for the rest of the year. So, and then and if you're that person, you're saying anytime that we get a new low, I'm just gonna be buying. So the next time I see a low, you see dip buying opportunities. And that's what this is kind of this what this could be potentially saying right now. So with this information, right, is now you kind of get inside of the psychology of what is potentially run, right? So if I'm seeing sell-offs, right, where is it selling to, right? It's selling to something bullish. So high probability is if we do get a sell, We try to buy somewhere inside of this fair value gap. That's the low, middle, and the high, right? Before I look for like a start turning my bias to selling, I got to see us trade back below the low of this before I even look for a real sale, right? So if I take sales, right, it's not to say that I can't trade short. It's to say that if I do take a sale, I do take my money and I go on for the day. But if I take a buy and if I'm like looking for larger and bigger targets, the momentum has shifted to the upside. So if I take buys, I can look for bigger targets on the buy side because the buy side has taken the momentum. So that's when I can look at TP 5 and 6 and 7 or 10R trade or 13R trade or something like that. But on my shorts, if I take the shorts, I can take them, but let me do a 2 to 1. Let me do a 3 to 1 at the most. You know what I'm saying? So I'm not like right now, the momentum ain't on the short side right now. So I can't look for a 10 to 1 or a 5 to 1 or 6 to 1 on the short side, depending on how my trade set up, right? If you normally, if we were in a bearish situation, which we have been over here all throughout this part of the move, if I take a short over here, now I can look for multiple X's, right? I can look for 5X, 6X, 10X on this setup because the momentum to the downside, the momentum shift, now I can take the opposite approach. But and in this case, could I have taken a buy here? Yeah, I could have taken a buy, but thus a buy that's taking a buy knowing that we in a bearish situation. So I'm gonna take my 2-3x and get up out of there, take my money, get up out of there. But if I do see a short setup, I'm gonna take that, but I'm gonna take that with more with a larger profit target, right? And I can do that knowing that I can be a little more confident with taking the bigger trades on the short side because the momentum is to the downside now, right? And that's just stuff you'll notice as you study your own self, as you journal and all that stuff. You'll know that about yourself, how you perform on that. So again, this is probably the best session of the year. So downside, this swing low, we buy at the 1 or the 3, right? If we get below that, we can look again at the 5. I'm gonna just deal with this range. We can look again at the 5, but given the circumstances, if we are still getting positive news, the 1 or the 3 will give us our bounce, and that can start our next move. You can look at the same targets over here. If we go ahead and take this high, we push up into above this weekly high. We make a new weekly high. We trade into the yearly opening price and into this daily fair value gap. This is a bearish fair value gap. So we could get a rejection here at the 1. But if we don't sell off at the 1, we hold inside here, we hold a yearly, and then the 2-3 takes us higher. The 3 trades into an order block on the daily. So that's the next higher time frame point of interest that we could get some kind of reaction from once we get up in there. That could start a new move to the downside if we get a trade into that range, right? If we do get a move to the downside and it holds at this area because this would be neutral now. So this could push us up, this could hold us, and then we could take out the 3, take out this order block, take out this liquidity. There's a previous day high here from the daily, right? This could also set up a new move to the downside. Maybe we get some bad news that change the market that changes the momentum back to the downside. Don't know yet, but that is a possibility with us having CPI and PCE the rest of the week. I don't know if it's going to do that or not though. So Everybody got it? Makes sense on that? This style. You tracking on this? No questions?
Yes,
Okay.
sir. Good.
Okay. Cool, cool. There's NQ. Dang. Let me see if I can get my mouse back on. Okay. All right, cool. Pretty much the same thing. Um, Pretty much the same thing, right? We already made it to the order block on the daily right here. So we already in there and we traded through it, right? So now that we traded through this order block, it becomes potential support, right? So that's one thing to note already, right? Then right above us, yearly opening price, which is 25,460, right? There's a liquidity here, there's liquidity here, liquidity here. Is going to want that if it goes higher. So we already know these are our targets if it goes higher. I don't even know if I have that on there. Oh, it already took this one. It already took that. So that's done. It took this already. This was a high from March. P previous week high. What's above this? This high. This is a previous day high. This high right above. So really is the yearly. Really is the yearly. Because after it take this, there's not really a high in between this high and the yearly. Because these highs, if it get up there, it's going to take all that at the same time, probably. Or it's going to just fall short. So let's go to the daily chart. See, we took all that. This is left right here. There's another order block right here, sitting right at the yearly. I think that's the one we need to look at. Close is 25. Close is 597. 50. Okay. So before we can go higher, we need to deal with this. And this is we can't go no further until we deal with this. So these three price points, high, middle, and low, are the levels that we need to deal with. We already traded through this other one. So we already traded through this one. That's right here. And now this is looking like it's about to use this support area to get us up and above this high into this range. And that's kind of what we looking like. So if we take all this out, we got a fair value gap already. You can see it on, it hasn't completed itself, but on the 4 hour, you'll see it on the 4 hour. And then we took this high, and these highs are at risk, and this yearly opening price is at risk. And then that puts us inside of this order block. And then this is the next high after we were, if we were to get above all that. So that's If we're gonna go higher, these are areas that we will likely see it take, right? Go to the 4 hour, the order block. See, we took all of this out. All of this on the buy side, we took this, we took that, we took this. It's all gone. All of that's gone. We don't even need it anymore because all that's gone. The one we need is we took a previous week high. That's all we need because that's higher time frame. Just as a reminder that we took out a previous week high. The daily high, we don't need that. The order block, I mean, the fair value gap is this opening, I mean, this close all the way up to the open of this candle right here. 3 levels, high, middle, and low. This order block is, we're going to use it, but we got something more important than that right now. So we just going to get that out of our view. But it is there. And then the low on this is 94. Open on this is 94. All right. So that's what we got. So now potential upside. And I'm using from the candle close is here. This is the high of the week right here. The last swing low is here. That's the range we need to operate in. This is our money right here. We already traded into the fair value gap. So when I see this kind of telling me that this particular one might go deeper. If we already in it, that means we might go deeper into it. So we might come past the middle or and maybe near the low at some point. If we go push up, um, if we pushing up though, off of the close, which is here, we taking this high. We trade into the mid to the yearly open. We hold inside of the order block. We use that to either take the high out or we fail the high and hold near, and then the 4-5 move take us higher. If we get a sell off, it's gonna happen at or around the order block. So that's what I'm looking for upside. From the downside, right? This is one of those signs that we could go further down into this because we already in there. So the one takes out this low. We could get a bounce at the middle. If we get a bounce at the middle, that could push us higher. Or we get the 2 to take us deeper into it. And we try to get a bounce at the 3, which is down there at the low. If we decide to go lower, it'll probably be after we make either the 1 or the 3, and then we use the middle or something where along that to take out the whole fair value gap, and then we go lower. Let me get rid of some of this stuff on here. This is done. This is done. This is done as well. This is the gap from today, from this week. That's the weekly opening price. You are still going to be used. Okay, that looks good. So if we get to 5, we at least come back to the gap that we made. But that pretty much gives a whole outlook. So we made the yearly low last week. We came off the low. We set this short-term high. We traded it into the fair value gap. We traded pretty much right off the middle because that's where this low is right here. Then we took out this high. That's taking out the previous week high. Then once we took out that high, we set a new high after we took out this high. We opened up, we traded back down into this fair value gap right here. I don't have it drawn up, but there's one right here. But mainly all of the price pretty much held at the opening gap for the week. And then that's where we traded down to. That's where price ran from when the news, this whole run is the news up. And now we set the high of the week up here. And then now it is a fair value gap that we left. And right now we already trading into it. So we need to see how far into this is going to go. And once it goes into it, you want to watch for high, middle, and low. It should react to one of these levels. And if it doesn't, you can see this wick is at the 25% mark. There's another 25% mark, which it should be roughly right around this area right here. You just take half of this from, take the half between the middle and the low. That's the 50% of that lower range. And then you can see the 25% area and then the 75% area that give you the other levels to look out for. So you can see this low right here that we already been talking about is pretty much right here at this 920 level. It's almost spot on. So this is the other level. If we don't buy at the middle, it comes down to this 75 level. And then if not, it just come back down to the low. So I'll actually just leave those on there and I'm gonna make those orange if you want to use that. Okay, this is NQ. It's nice. And then last but not least, ES is looking pretty much the same. ES looking the same. It's just slight differences. That's all it is. It's like a map. It's like all of this stuff just basically give you a map to work with. Is it going to follow the right same directions? No. Like you might turn off the street just a little different, right? You might take the turn just ahead of the street, but it still give you something, the areas to consider, you know what I'm saying? Like it's not going to be perfect, but this gives you kind of like the, a turn, a turn by turn consideration, right? Do you take the same routes or take it all the time? No. But these are high probability areas for you to consider. That's the key out of this, you know. Low is 9 even. And this is the fair value gap. I'm gonna put the 25 and the 75 on there so you can get the lower part. 25 is gonna be orange. And the 75. Same thing as before. We traded through. There was a fair value gap right here. We traded through it. This is likely a bullish area now, right? We got something to replace that already, so we just gonna slide that over. We know it's there, so we could use those levels again, but just like before, we know it's there. And then if we come back into this, the main price point we're gonna look at is 6,700. Why? Because that's in this fair value gap. That's the new thing. Then you can see the low we made is pretty much right around this 67.72 area. So we know that low is valid, right? We don't need this anymore. We took this high. We don't need him. We took him. We took him or her, whoever that is. We took this previous week high. We don't need you anymore. But I'm gonna keep the previous week high on the chart just to show that we bullish on the weekly. We took you already. This is the low. Let's get you out of the way for now. We traded through you. You were bearish. Now you are no longer being used. Oops. Undo. I'm gonna just keep you on there as a reminder. This is the gap for the week. I don't think we're gonna be coming back down there. And then this is the low of the week right here. 311. Okay. That's the low of the week. A little bit of that. If we do get down any lower, we come down here. I think we got enough protection at this point for us to not have to consider that at the moment. But just like we had before, weekly high, the order block right above us, we traded through this order block already. That's right here. You can look at these 2 candles or these 3 candles. We traded through them either way. The next level is this other order block right here from the daily. And then you see we got the yearly price right inside of there. So we likely get the rejection at the 3, which will tap us at the yearly. If we do get a rejection and we don't sell off, we stay inside or near this low or this fair value, this order block. And then we hold and we take trade outside of it. There's swing high over here that will probably be the target. And then this is a previous week high. Okay. So that's our upside target for now, right? Then if we do sell off, right? Most of if we sell off, looks like we stay inside of this fair value gap that we in right now, that we just above. So if we do sell off, this kind of puts us in a situation where we got a very strong support area, right? And we already traded to this 67.72. So if we do trade back into this, that means we sweep this and we likely come to the middle or this 75 level or maybe even a low. But worst case scenario right now, since the momentum to the upside, I would say we stay inside of this range and we either get a low somewhere inside of this. You could do homework on this too. Most of the time you get a fair value gap. A fair value gap is going to make a high or a low inside of there. If it's a bullish fair value gap, you're going to get a low inside of it. If it's a high, you're going to get a high. If it's a bearish fair value gap, you're going to get a high inside of there. So that's why I'm looking for my next swing high. I mean, my next higher low to happen inside of this fair value gap somewhere. So I think it'll be at the one or the three. In worst case scenario, it happens at the four. So we'll get a bounce at the three or the three or the five, highest probability, three or the five. And if you want to back test this, you can back test it. Like I can show you several examples. And then we just off of if everything comes out right and we do go higher, you can see we not too far away from the all-time high we made back on January 28th. So, and that would be one of the next highs because then after we take this high, we got this little high, these equal highs right here. Then we got this high, and then pretty much all-time high will be the next. So this is ES. And let me make sure I get that in the frame. And this is ES. Sweet. Man, today was fire. I appreciate you again, Shanika. I don't know if you're still on here, but man, the next the next millionaire prop firm trader. Yeah, you're about to be getting it. You're about to be getting it, man. So that's all I got, man. That's all I got, man. That's all I got, man. I done gave it everything. I'll see y'all. I don't know if anybody got any more questions, any more comments, whatever the case is, you speak now or forever hold your peace.
Thank you, Corey.
Appreciate it, Ari. Baby, Angela Reese over there and Caitlin Clark.
And feature trader too.
Boy, boy. We got Angela Reese for Atlanta Dream now.
We sure do. I've been trying to get some tickets. Let me know if you can
Man,
find some, bro, because they high now.
man,
I should have got them earlier.
man, that's gonna be a fun time, man. That's gonna be fun, man. Those season tickets probably jumped up.
I was
Gonna have-
waiting for the alert for them to send it to me. I shouldn't have waited. I should have just went on ahead and because I got on the waiting list to get the alert for the season ticket.
Now
yeah,
we're gonna be on fire.
But now, I yeah,
yeah.
crazy.
Now we're gonna be on fire.
I know, right? They're gonna have more games at State Farm now, probably.
I hope so.
Me too.
That's what's up, man.
I love.
That's what's up.
Sure. Are you on VetTix?
Vet text. You know, I have got on there, but I haven't used them yet, man. My buddy
Wow.
put me on it.
Yeah, you gotta check it out because like you never know what you're gonna find on there, and they may have it. And like we just got me and some friends got UFC tickets, and we're
What?
stateside, and we got four
What?
tickets for $16.
What? Oh my
Yeah.
Is
God.
it bet like
Vet tech.
For
Vet tickets.
Yeah,
Oh, okay.
for veterans.
What?
But if you see it on there, and you grab it, the beauty of it is whether you get one ticket or four tickets, it's $16.
Let
So
me stop recording this. Hold on.